think $5 is quite possible if the situation continues and the blockade persists into the summer driving season. So we're approaching the Memorial Day weekend, and a lot of people will hit the roads despite the high gasoline price. I would be watching how this impacts spending elsewhere. I think we are all used to paying for gas. This is somewhat inelastic in a sense, but we may be cutting on other things, like clothing or, some other services, for example.
So how sticky do you think this inflation could be? If you're the Federal Reserve, are you thinking this is, I'm not going to use the word transitory, but I mean, how sticky can this be, do you think?
It depends on how long it lasts, quite frankly. For now, the pass-through into a broader inflation is pretty limited, actually. If you look at the composition of CPI price increases, where do you see all these increases? You see that in products and services, which usually experience an immediate pass-through, so like airfares or food prices, things like that. But it hasn't yet passed through into a broader core inflation metrics. So the longer it lasts, the higher core prices will be, and that would make the Federal Reserve job much more difficult.
So what is the concern here for the Federal Reserve? How do you think they're going to react here, Yelena, going forward?
They're strictly on hold for now, and there are a lot of different reasons for them to stay on hold. The economy is doing okay, right? The labor market is relatively healthy, and as long as the unemployment rate holds near the current levels, they have this luxury actually of staying on hold. So another reason to stay on hold is the new Fed chair coming in, right? So he cannot really cut rates at this point because of the inflation, obviously, or, he would have to dissent from the committee's decision, which will not look pretty at all. But, instead, we could start hearing from the new Fed chair things like, revamping the structure of the Fed or the Fed communication tools and things like that. So they can do this for now, right, while staying on hold on interest rates.
Do you have a yield in your head? I haven't asked this, folks, coming down, which is all clear for Chairman Warsh to cut rates? Is it like, does he need to get back to 4.10, 10-year, or sub 4%? I mean, where's that in your head, Yelena?
I don't think there's a clear connection between short-term rates and long-term rates, quite frankly. So, at least it hasn't been over the last several years. So I think, cutting rates will happen eventually. Our own projections call for that next year. It's more of a normalization of policy rates. Remember, we are still in sort of a slightly restrictive territory, at least, according to the Fed dot plot, so which is also in question. But I think that, we will have rate cuts eventually, but not because of what the market says, but because of what the economy does. In our own projections, we expect a lot of demand destruction from all these inflationary pressures that we're experiencing right now. So eventually we will see a significant slowdown in economic growth and potentially negative risks to the labor market.
Yelena, AI has basically consumed at least the airwaves, the marketplace, the dialogue in the markets. Give us a sense of how much of the economic growth that we're experiencing, which is probably better than a lot of people would think, is really driven by AI, maybe even masking some weakness in other parts of the economy.
Well, 0.8 of GDP growth in the first quarter, which was 2%, right, came from AI-related investment. So this is growth that is highly concentrated in a particular sector. That is happening at the time when consumer growth is slowing. So consumers are still spending, and the sector is still growing, but it is growing at a slower pace. So I see that as a risk. And when growth is not diversified and highly concentrated, that is risky. So if all of a sudden, something happens to this AI investment, so where we left, I
Right.
still think that we need a broader kind of growth in the country.